Good morning, good morning, good morning, good morning, ladies and gentlemen. Good morning. This is Tasha M. Dye, the Trade Whisperer, creator of the BYOB Cash Out Strategy. Good morning, good morning, good morning. And ladies and gentlemen, let me officially welcome each and every last one of you all to our profit call. Yes, BYOB, this is our profit call. And as I stated, I just want to welcome all of you all here on this. Yes, what is it, Wednesday? This Wednesday morning. So, guys, as you log in, go ahead and drop it in the chat. Let me know where you're calling in from, along with those affirmations. And go ahead and jump on over to Facebook and make sure you share the stream from our page, BYOB Movement Worldwide. Not a group. It is a difference in a page and a group. Get your little Facebook etiquette this morning. But go ahead and share our page, okay? Share our page. You can't share from a group. You can share in a group. You can't share from a group, but you can share page information. So remember, our rally cry is 2 million strong, and we want to make sure that 2 million families are financially educated and impacted. So good morning, good morning, good morning. All right, let me see. We have Milwaukee. Good morning. Good morning, good morning, good morning, Minnesota. Good morning, Essex, UK. Good morning, good morning. Good morning, Toledo. Good morning, Fort Mitchell, Alabama. Good morning. Good morning, Manchester, United Kingdom. Good morning, Cleveland, Ohio. Columbus, Georgia. Good morning, Milwaukee. Good morning, good morning. Yes, 2 million strong, London. Good morning, Chattanooga, Jacksonville. Good now. Good morning, New Jersey. Good morning, London. Good morning. Okay, London. London said, look, I did not misunderstand. I understand the assignment is still to make sure we get up. We got to get up at 5 a.m. Eastern Standard Time. We need to be on this call. I've got many people asking me, let me tell you, good morning, South Carolina. Good morning, Greenville. We only are not currently doing the 9 a.m. call in our radio broadcast. We still have another full week of education, another full week of diving in. Good morning, Jacksonville. So you want to text, you want to make sure everybody understands. Look, now is the time. We are ramping up. We are gearing up. We're getting our mindset. We're developing our mindsets. We are. So I do have a question, right? But hey, let's do these affirmations first. Let's stay on track because y'all get me excited sometimes. Good morning, Stone Mountain, Georgia. Now, because I'm sitting here talking about mindset, and then so hey, let's talk about mindset. But no, let's talk about these affirmations as far as our mindset. I am an educated BYOB master trader anointed for wealth. I am the signal. All my trades in profit. I am 777. Right. Good morning. Good morning, Trinidad and Tobago. Good morning, Virginia. Good morning. And for those of you all who are chiming in from YouTube, from Facebook, good morning to you all too. You know, you could drop it in the chat too. Good morning, LaBelle. Good morning. Good morning. All right. So I am an educated BYOB master trader anointed for wealth. I am the signal. All my trades in profit. I am 777. Right. Good morning, London. So that's what we want to be mentally. I think we're just going to do the call in London this morning. Hey, that's where we at this morning, right? So, but seriously, guys, so if this is your first time here on the call this morning, let me get a 111. If you are still learning how to cash out, let me get a 222. Good morning, Cleveland, Tennessee. If you are cashing out, let me get a 777. And if you are compounding, let me get an 888. All right. So look, I see. Welcome. Look at all those 777s and 888s. I love it. Now, let me ask you this. If you have never pushed a button, you are new to this call, I already know you're a 111. But if you have never pushed a button, you have never taken a trade yet, let me get a 333. You go from being new to learning to pushing a button. If you've never pushed a button, let me get a 333. All right, so I'm going to challenge you all. We're going to see what happens this morning. Now, let me get my screen share. We're gonna see what happens this morning, because let me show you something. Let me show you. And let me show you. I want to see this liquidity right here in the market right now. This is this is the average liquidity in the market. And then this is where we are right now. So you see how it has the last couple of days, right? From the 6th to the 8th. So you can see where it breaks down like that average liquidity, where it's at. Some is higher, some obviously is lower. We're at a low point right now. And of course, this time of the year, we're going to deal with that, okay? We're going to deal with that. And guess what? It's okay. Now, how many of you all cashed out yesterday? Let me get 777s. Let me get 777s. So we went through the same thing yesterday, and you all cashed out. Look at that. I mean, the chat was flooded. If you are new to this call, if you are streaming, you're watching us, I need you to go to BYOB Cash Out Telegram chat. Make sure you are in the community. So just go there, log in, and make sure you are in the Telegram chat. And you'll see all those 777s. And it's those of you all who are cashing out and walking in profit. I mean, and that's what it is. And so I just want you guys to get an understanding. Now, hopefully, for those of you all who are 333, if you do not have first of all, let's start here. If you're not enrolled, you need to get enrolled. Like that's step one. But because you could be a guest on here for somebody. But if you are enrolled and you haven't pushed a button, I'm challenging you all to make sure you have your MetaTrader 4 and your vibrato. And I'm challenging you all, we're going to push the button. All right, we're going to walk past it. We're going to push through, the fear, the anxiety, the differentness of what this is. And we're going to push the button. And so you're going to push the button because you want to. You want to walk in that excellence. And I know I have some people on here that had never pushed a button before. And now they're once they got past that initial angst of this is something different and that initial, right? Guess what? They're now cashing out. So you just have to get past that. You know what I mean? You just have to get past that. And getting past that means you have to do it. So we're going to push you in the water. All right. We're going to push it in. You ever had somebody just push you in the pool? Or is that was my experience. Cause I wouldn't get in the water. Like I refuse, I refuse to get in the water. I refuse to swim. I would look at other people swimming. I'd be like, oh, it look like y'all having so much fun. I might let my feet wade in the water, like off on the side. And then one day my cousin was like, you know what? And he didn't say nothing. He just pushed. Now it was kind of mean, but at the same time, after I finished spazzing out and everything else, I was like, oh, I could stand up in here. So I just want you guys to understand that we're going to push you in the water, So I was mad at him probably for about a year. But after that, I got over it because I learned how to swim. And then I was like, I wonder if I would have ever got in there had he not pushed me. So we're going to push you. We're going to push you. We're going to push you in the water. Get in the pool, get in the market, right? Push the button. So for those of you all, can you accept the challenge? Yeah, obviously, I'm not sitting there with you because if I was sitting there with you, I would push you the way my cousin pushed me. But for those of you all who dropped that 333, that say you never pushed the button before, now is your time. Can you accept the challenge to push the button? Can you accept the challenge to be great? Can you accept the challenge to walk in excellence? Can you accept the challenge to begin walking in wealth, right? Can we accept that challenge? Y'all quiet now. Crickets. No, y'all gonna push that button. All right, so let's see what's going on this morning, okay? As we're looking, and as we begin to see, I want you to see right here, right? I want you to, there we go. Thank you. So there you see, even though I know it's not you, but I like the fact that you say, you know what, I'm all in. I'm all in this. I love that. So now what we're looking at is there actually is some news today. Now, there we go. There she is. So there is literally, right, 3 red folders today on CAD and USD. Now, AUD is this evening. We're not really trading for 10 pips and cash out. You're not trading at 5 o'clock anyway. Now, this is obviously set to Eastern Standard Time. Somebody know why we don't trade at 5 o'clock? We've trained on it. We've talked about it, but we don't trade at 5 o'clock. Okay. We don't. We just not trading at 5 o'clock. And that's because that's that. Remember, we operate on a UTC time. Obviously, my settings are set for Eastern Standard Time. Your settings should be set for wherever you are for this particular. But 5 p.m. Eastern is when that UTC time, right? It's when it's kind of, well, let me say 5, 6, 7 in that range. That's when we're beginning that new day. So obviously, the UTC timer kind of fluctuates. Well, that time doesn't fluctuate, but I know that they're not on daylight saving time. But that doesn't impact this. So let me be clear. I want to be very, very clear. 5 p.m., 5, 6, 7, the spreads widen. Okay, they get really big because they're prepping and then changing and then rolling into a new day from a UTC time. So if I'm looking, my spread, if you look on your MetaTrader 4, your spread from your broker, it might be, let me pull mine up so I can tell you very, very accurately. Now, if I look at, right, one of the ones we're looking at this morning, well, no, that's Euro USD at the top of mine. So now if I'm looking, right, like at the top, I got my GBP USD, my Euro USD, my AUD USD. If I'm looking at those, okay, let's just look at those. So any one of those, like if I look at GBP USD right now, and yours should be on advanced, okay? It should be on advanced. Now, what you see below it on my broker, it says GBP USD, it says 15, and it's fluctuating between 14, 15, right? It's not 15, that's not a 15 pip spread. This is why I tell you guys, look, don't try to calculate your spread into taking a trade. Just take the doggone trade. Just take the trade. That's literally 1 pip. All right, it's 1 pip and 5 pip ups. So now it's down to 3. 1 pip is a pip ups. That's what that is. So if you have it on advanced, then what you're seeing is you're seeing those numbers, the high and the low, they have 2 numbers that are big. Well, that's your pip. So obviously, the actual pip will be the 1, but most people do at least 10, it's so how many times are we only going to go for less than 10 pips? Everything else, you need 2 numbers. Over 10 and above, you need 2 numbers. So it just makes sense to have those 2 big. And then that pipette, the pipette is that number at the top. And then, so the difference between the high and the low, that's your spread. All right, that's your spread. So if you're looking at your MetaTrader 4, that's the spread from your broker. So that's what you're seeing. Y'all see this with me? 555. Y'all see it? All right, good. Now, right now, as you're looking, right, as you can see, that's your spread. Now at 5 p.m. to about 7 p.m., that number is like 30 something, it could be 50. It can be higher than that. So that's because remember how when we talked about cycle levels, we talk about those. Well, during that time, that's the spreads widen. During that area, the spreads widen, and you also have the, we're on the news. You see the news is right here. You see the news? That's what we're talking about. So if you just join us, I'm on top of it today. So I'm on top of my game today. So when you see when you're looking at that, right, and you see when you're seeing that and you see that, then that actually widens, right? That widens. And so when the days switch over, the spreads widen. Now that's because there are fees and it's just all sorts of things. That's why you get like those swap fees. If you're in a trade, you notice how if you take a trade right now, there's no swap fee, but you're swapping from one day to another. That's the best way I can describe it. You're swapping from one day to another. And so that's when you start getting those swap fees. And those swap fees, this is where, those, like I say, those spreads come in, right? That's where those spreads come in. So now what you're seeing is that'll be wider. So you're not trading because now, instead of just having to pass a pip that the broker, because it's like a pip and some change. So instead of just having to get a pip like normal, what we're doing is at 5 o'clock, we might have to get 7 pips. We might have to get 10 pips. So does it really make sense to be trying to get 10 pips and then have to go 30 pips, because I've seen it that high too, and then have to go 30 pips or even 15 pips to get 10 pips, does that really make any logical sense, right? Does it make sense to anybody on here? No, it shouldn't make any sense. So just a little, now you got the why behind the what, so now you guys can stop doing it. Stop trading at that time, right? Don't enter trade now, and just don't do it. Just don't do it. Just don't do it. I've seen all kind of crazy stuff where people say, hey, make sure you take your stop loss out at that time. No, we're not doing that. We just know when to get in the market, and we will know when to get out of the market. We know when we should be trading, and we know when we shouldn't be trading, right? That's what we're doing. So that's so obviously, and then of course, that is a red folder, right? Of course, that is a red folder. Then what's going to happen is, being that it's a red folder, is going to have an even greater impact. So we're not doing that. And AUD and NZD, they will spike. They like to spike. So we'll see if they come back to that spike. But what I do know to be true, since I've been trading, now I know it's not as great since COVID, but they like to spike. All right. Let's jump over here, and you kind of see the same thing. So any questions, comments, or testimonies on that? Right? So it's all the same on here. Questions, comments, or testimonies on that? Nope, none. All right, let's jump on over here. So what we're gonna do is look, Euro USD trigger, Euro CAD trigger. It's a lot. You see that there's now I went to the Harmonic Scanner, the CAD JPY. I went to the Harmonic Scanner. I thought I went to the Harmonic Scanner. I did. I promise I did. I promise I did. I promise I did. So when you come here to the Harmonic Scanner, like you see, you got the GBP CAD, you got US, where'd it go? So yeah, here we go. CAD, CAD has some news today. So if the fundamentals end up matching, you have some good trades. NZD CAD, look at all these CADs. Look, this one is pulling for a buy. This one look like it's already kind of played out a little bit, but it triggered for a buy. Euro CAD, this one triggered for a buy. USD CAD, this one triggered for a buy. So what does that tell you that the expectation is from our reports? Somebody help me out. What is it? What is my expectation if it's triggering all these harmonic patterns with the fundamentals coming out? Right? We're getting your minds right now. What's that telling you? Okay, so let me help you, because I like the fact that I know what you're thinking just based on your response, but let me help you. So CAD it's not going to be positive for the currency, right? Because if it was positive for the currency, CAD is the base currency, CAD is the counter currency, right? CAD is the counter currency. So if everything is triggering for a buy setup, right? Every pattern is being identified for a buy setup. That means that my counter currency is weaker. Forget about what is the pairing right now. My base currency is the first currency. My base currency, this is my base. You have two currencies. You have a base currency and you have a counter currency. My base currency is the first currency. That is, if that one is stronger, then the market buys, okay? My counter currency is CAD in this case, but if this one is stronger, then the market sells, okay? So you have two currencies paired together. Whichever is the strongest determines if the market buys or sells. So if CAD is my counter currency, right? It is my second one, right? It is my second one. Then what that means is that what we have to look at, right? What we have to look at is the fact that might be negative, right? That might be that if it's weaker, then it's gonna buy. So what it's saying is that CAD is going to be the weaker currency, right? It's going to be the weaker. It's going to weaken it. Does that mean that oil prices are going down as well? Well, what's funny is I erased it. It was on here. So, and then I'm about to walk you through the strategy because I know some of you all are new and haven't pushed the button yet. I'm gonna walk you through the strategy, right? You're welcome. I'm gonna walk you through the strategy. Now where we are right here, we talk about CAD. So we talked about this yesterday. You see, it's actually where we talked about it coming up to yesterday. And so now CAD and US oil do have a heavy correlation. Now, don't take it blindly. I still need for you all to come analyze, okay? Do not blindly just make any assumptions. However, that is a very strong probability, even if it pulls up to about right here. Even if it pulls up to about right here, it's a very, very strong probability. You notice that on my 4 hour, my 4 hour is overbought, right? My 4 hour is overbought. You notice that we're knocking on this, okay? You know where we are. So obviously, like you say, if CAD is strong, the oil tends to be stronger. So there is a heavy correlation. You know, we got a little mixture. Look at my hour right here. So you still come analyze it, but that does say, hey, make sure you don't leave oil out. Make sure you come take a look at it. All right. That's exactly what it means. So let's look at this one. Today, we're going to do Euro CAD. You're welcome. Today, and I like the fact that y'all pay attention. We're going to do Euro CAD because it's triggered here right before the call. All right. It had a trigger somewhere that one might have replaced it, but it had another one, but we're not going to be worried about that because EuroCAD had triggered for a sale on my 5 minute, which it just did again 6 minutes ago. And then of course, EuroCAD, right? On the Harmonic Scanner, it triggered for a buy. So let's look at this. So first thing first, let's talk BYOB cash out strategy. All right. Let's talk BYOB cash out. And guys, if this is, we're really focused. Obviously, we're doing an analysis, but if we have any questions, guys, any, okay? If you have any questions, because I want to make sure you guys get this, please drop it in the chat, okay? Please drop it in the chat and ask your question, all right? Now, if you're not enrolled, obviously, I'm gonna redirect you to the enrollment process, because there are some things you cannot skip, like going through the academy, getting the foundation and basis of education. There are some things you cannot skip. This is not a YouTube university. This is an enhancement. We're building out a BYOB university, not a YouTube university. There's an enhancement. We enhance the education. We help you understand how to navigate it and what to do. So that's what we do here, okay? So here we are. We're gonna do this historical trade. Let's take a look at this, okay? So we're looking at my stochastic, we're looking at Hikanashi candles, and we're looking at a PSAR, all right? So notice my higher time frames is always where we have direction. Some of you guys might have already taken this trade if you've already been up, I'm just saying. So we're looking there, we're looking here, right? We're looking here on my 15 where my analysis and our lower time frames is always entry point, all right? So now let's really take a look because this was a beautiful trade. We don't say beautiful, we say beautiful, right? This was a beautiful trade. So when I'm looking here, my stochastic, okay? My stochastic is always gonna be around that 20 or 80. So when we're looking here around this 20 or 80, I'm looking for that blue line to cross over the red. Let me do this as well, because I want to make sure, as we're analyzing the historical trade, let's analyze the current trigger because it's triggered twice. And it's already been a trade opportunity, and I want to make sure I'm walking you guys through it as well. So here we are historically. Now, somebody tell me what kind of trade this would be if we taking the trade, if we end up taking a trade here. What type of trade would it be? Because I don't need anybody to tell me, it's not at the 80. I don't need a private message. I don't need a text message. I don't need it's not at the 80, right? A continuation. It'd be a continuation, okay? It would be a continuation. It would be a continuation. Because somebody somewhere is going to tell me, somebody somewhere is going to text me and say, it's not at the 80. I know. I want to help you guys understand how to walk through this, right? So here we are. My stochastic, right? The blue line cross over the red in a downward momentum, and that's going to be around that 80. Now, if you are a 111 or even a 333 trying to push this button for the very first time, okay, you're obviously going to be focused on this, okay? This is what you're looking for. What we're looking at as far as this historical trade is concerned. This is where you need to be. This plain and simple, okay? Plain and simple. That's where you need to be. And you need to be there because you have to get familiar, right? Nobody, when we say push in the water, I'm not going to push you off the diving board into the deep end. We're going to push you where you can stand up, right? We don't want to drown you. We don't want to overwhelm you. We want you to be able to get in there. So right here, right? My stochastic. And then, of course, you have, my red candle with a flat top and a PSAR. So here you go, right? Notice that this is my leading indicator. I like this one because when I say beautiful trade, beautiful, right? You see how this is crossed over and we didn't even have to wait long. So come in here, right? And don't be complaining about how long you have to wait for a trade to manifest. Y'all wait 40 years for a retirement package to find out you got to keep working. So let's really put it in perspective, all right? So here, right? You see where now I had a PSAR, right? My dot flipped, right? My dot flipped. But here you see how you got this little, I don't have a flat top candle. So obviously that's not my trade, right? Obviously that's not my trade. Obviously, look at y'all cashing out. So obviously that's not my trade. So do I even have GU up here? Oh, y'all scalping unless y'all been in, oh wait, that's a 4 hour. I'm about to say y'all was scalping. So that's what they took. Okay. I'm like, what? No, we really didn't miss anything. Okay. So let's come back over here. Now let's come back over here. And so now what we're doing is this triggered on a 5 minute. When I come to my 5 minute, you do see where the correction, I want you to understand the validity of the trigger. Okay. Now, so it's definitely in that correction. So now you see that correction. You see those green candles on the 5 minute? You see that correction in here. Where it's pulling up, that's that correction. But look at how this is starting to curve back down. Look at what's happening right here. So let's check, from the 5 minute, let's check my 30. Very valid trigger. We understand where we are in the market. From my 15 minute where we analyze, right? Let's come check my hour. Very valid trigger. Right? Very valid trigger. Now, this one we would have had to wait. It's just that plain and simple because we wouldn't have taken that trade in. So we would have waited those 15 minutes because we did not have confluence. We did not before, and then we ended up with it. So this is where you would have been able to take that trade. So now look at what we are. Look at my hour. Look how strong that is, okay? Now, look at my 4 hour. My 4 hour, this is where we are. So obviously we're not taking a trade until we bypass this, okay? I want to be clear. You're not getting that trade. All the triggers are valid. Everything is there. We're not taking a trade until we bypass that. Now I am going to look left a little bit, right? So hear me clearly. 15 minute chart, right? 15 minute chart, okay? To the 1 hour, behind my confluence, drop down, get my entry point. Right? Stop loss above the PSAR. Stop loss always above the PSAR. So your stop loss would have been somewhere in here, right? Stop loss somewhere in there. Okay. So now you can see, right? You can definitely see where we are. Valid trigger, valid setup, valid trade. You guys would have cashed out over here. 10 pips and cash out or your first support and resistance line. When you begin to understand those support and resistance lines, you would have got 50 pips, right? That's what we'd be. We'd be a 50 pip profit. So now, right, we trigger for a sell. So when I'm looking, now let's add that top-down analysis approach to it. Very important. We can't just stay there. We have to make that applicable. So when I look left, okay, when I look left from a top-down analysis approach, we might break this. We might break it, but we're going to break it with some common sense, right? We're going to break it with some sense. We're going to understand where the market came down to previously, right here. All right. We're going to see that. Then, okay, I want you to see where the market, like this is what you call market structure. All right. What we're doing is what you call market structure. And then even think about this. Now I will pay close attention because obviously this is a psych level. right? Now, obviously, the more zeros, so it's what we call a mini psych level, not a mini, but a minor. The major would have been like the 4 0 0, right? Like that 4-1, the 4-2, the 4-3. Those are my major ones, okay? Obviously, the more zeros. So, but this is that 4-2-0-0, right? So it's like a minor one in between there. All right. So you can see that we're like where those psych levels are. And what we know from here to here, right? Ta-da, 100 pips. Ta-da, that's what 100 pips in there. So when you're if this does sell, right? We break this zone, right? You see it rejected off of there. That's why I said if right now, because it's always caught in a correction. But if we come down here and we look new 50, new 30-minute, you see what's happening, that rejection happening. And so I'm not too intrigued that we're going to break it. However, the point I'm making, if we were to break it, you know where your boundaries are, right? You know where your boundaries would have been, right? Because of this psych level. Y'all see that? Y'all see it? Yes or no, maybe so? All right. So we understood that from here. Now, if you take any continuation trades, I need you all to understand any continuation trades. I need you all to understand, right? Supporter, this is how they cashed out on this. Because none of this said blue line cross over the red at the 80. None of this said blue line cross over the red at the 80. It didn't say any of that. But it did show rejection. They did see support and resistance lines. They did see now, right? You see it broke down and pulled up. Now they did see all of this, right? So now I wouldn't have called this on here with new people, but I know what they took. I know exactly what they took and why they took it. I know exactly why we have 777s. But for, now it's strong, but it's also kind of dipping for pips a little bit, right? You see all the rejection. That's why I didn't have this set up, because I know all that rejection was there. So for somebody new to trading, or is trying to get it right, I wouldn't have called this for a new person. But you see all my experienced traders are dropping those 777s. So that's just a little preview of your skill set development. All right. So your skill set development is going to come there. So I want y'all to know we did not miss a trade. I promise we did not miss a trade. All right. So back over here, you see my hour. My hour is in that sale. All right. Now, this had been, right? This is a new 4-hour candle. But prior to the call, I had a whole different conversation set up for you guys, because this was in a buy and this was in a sell. So it was a whole different conversation. But when you get so close to a 4-hour candle, sometimes it's best to wait. Because if this would have been in that buy, if this stochastic was curving up, right? This was showing a buy, then because I wanted you guys to understand how, like, when you guys see Miss Anderson doing the basics, she has the 5 to 15 an hour, right? She has the 5 to 15 an hour. That's what she has. And that's because that's the basics. And I wanted you to see why you don't really have to wait. Because let's just look at this for a minute. It's really still the same conversation. So let's talk about it for just a minute. All right. So I'm gonna stay here. All right. Let's come right here. Because if we were looking at this previously, our 4-hour would have been in this buy, right? Our 4-hour would have been in this area. Yet my hour, right? We know my hour, this is where that 4 hours coming up. Where are we at? This is where that 4 hours started. Let me say that. That's where it started. Now we know that, let me come back over here because I want to get this right. When did this start? So come to my hour. That's a new hour. That's an hour. I actually don't need another arrow. So this is where my downward trend started coming, right? So right up in there. So notice that I'm still in this candle, this 4-hour, and it's still in a buy, okay? My stochastic was curving up and this was still in a buy on my 4-hour. However, look at my hour. My stochastic is in a sale, right? You see that red candle in the sale, right? You see all of that. So this is why it's 10 pips, right? You notice how when you're doing the straight basics, you have your hour, your 15-minute, and your 5, all right? So that's it. That's all we need. That's why it's 10 pips. If you want more than 10 pips, right? And it works. You notice this drop for 50 pips. We already analyzed it. We already looked at it. It was a 50 pip drop. Okay. 40 something, almost 50. I rounded it. But you would have gotten your 10 pips. Yes or no? Would you have gotten your 10 pips? Absolutely. What happens is when you try to force the issue and get more than that, I don't care. It could have dropped 50. It could have dropped 100. It could have dropped 30. It's not going to always do that. It's not going to always do that. Sometimes you might just get those 10. So from the basics, when you're on here, that's why that foundation is really strong. And you can get your 10 pips and cash out. To go higher, we need to begin to do a little bit more understanding. We need to dig in and get a little bit more, right? Market structure. We have to get in and get just a little bit more at a time. Because now, obviously, this began to curve down with this new 4-hour, but this is where my skilled traders, or the ones like, the ones that are, like doing a little bit more, this is where all that comes into play, right? Is my advantage, because it's no way that if you are 111 or a 222, you took this trade. You just didn't do it. You did not take this trade. On this, all those 777 just came through. Y'all didn't take that trade. And now you know why you didn't take that trade, because that trade is not going, the way this looks, that's not going to always work out. It's not. Let me be clear. Let me help you. It's not. Look at all that rejection. So you have to look at my stochastic. I don't like it. I don't like it. I don't like it. Right? You have to have some sort of understanding of where you are in the market to do a little bit more. So now as we look at this, okay, now as you see this, what we are, all right, is this one is coming back for that sell, right? It's pushing back on that line. I would be very mindful of this psych level. This thing breaks through, if it pulls down, right? But obviously it's in that buy, right? It's in a buy. So let's mark this up, because on the hour, we triggered on the harmonic scanner. Any questions so far? Because I'm trying to make sure that you guys really understand this, and I know it's like I'm kind of building on so many layers in just an hour, but I want to make sure you guys are understanding it. So 555 that we have clarity. Let me get let me get your questions in there if you got questions. Did that make sense though? Like how you can focus on just the basics and then begin to build, right? You see that? What in the world? 44311. Okay. This thing lock up on me. If I have all 4 times lined up, moving and the by 4-hour moving sideways, I would have to see it, but I would assume, I would make an assumption. I would have to, but if you have alignment on every single time frame, confluence across, this is not, let me make sure I wrote these numbers down right, because that is not, let me make sure we wrote these numbers down right. So, that's not it. If you have everything in alignment, guys, if you have everything in alignment, then that's probably a good trade. So you're okay. So we got 4, 3, 4, 3, 5, 5, 1. I got 4, 4, 3, 1, 1, and we got 4, 5, 5, 3, 1. I did. That just looks big. So let me see. 4, 3, 5, 5, 1. Ta-da. 4, 3, 1, 4, 4. Yeah, that's right. It just looks so far away. Oh, it could be because I'm on a 15-minute. You got to give me a minute to get to that. All right. So what you're seeing is what this one did, okay? I probably should thin this one out or change the color or something, because that's not it. All right, so what you're seeing now is you're seeing that we got to have some rejection. I actually put for this one, just because I was curious, because I knew what we were, I actually have the entry point as well, which we don't use that entry point. I just want to see where they're saying it's going to come back down, because what they use is Fibonacci levels. So let's put on there. So I'm gonna pick it in. All right. So look at where it's bouncing off of. So that could be accurate, because that could have been a limit. So when I'm looking, okay, you can see that my harmonic scanner trigger for a buy. All right. This would be a very good trade. You know, look at how many pips that is. That's like 300 pips. Remember that AUD USD? When y'all probably looked at that the first time, I was like, ain't nowhere in the world that's gonna give you that much pips. Actually, it will. Let me bring that down. Actually, it will. So where we are, okay, when I'm looking at my 4 hour, you definitely see where we have some rejection. So now what we've done is we've gone from looking at the triggers and understanding why that triggering for a sale, looking at the big picture of the market to find out where we are with some of the rejection. And then at the same time, now we're looking at this harmonic scanner. And this is why I said, for those of you all who are new, you take the harmonic scanner and you combine that with the vibrata. This is where a lot of good setups happen for you. The other tools are phenomenal as well. We do use them. I just think that this helps you start seeing the market. Because did you guys see this before I pull this up? Just be honest. Did you see that pattern before I pulled that up? Did you guys see that pattern? Did you see that reversal? Let me ask it that way. You didn't see the reversal. Great. You're the only one on the call? I'm gonna just talk to you this morning. All right, you didn't see that reversal. Okay, so many of you guys did not see that reversal. So when you start wanting to understand some market structure, obviously, there are a few tools that I'm gonna lean for training purposes, beginners, right? And obviously, this is why. Because this one is gonna show you the reversal patterns, and the bounce back is gonna show you the trends, like when the trends shift, like those trend changes. And so that's ultimately like what you're gonna see. All right. And so now, depending on how that news come out, if the fundamentals align, if my fundamentals have an alignment with my technical analysis, is going to be very beautiful. All right. So makes sense. So we have our harmonic scanner trade. This is where they identify the entry point. We wait for blue line cross over the red. We wait. We trade BYOB cash out. All right. It's price action with a twist. So we're not just going to enter anything. All right. So even from a sale perspective, so we trigger for a buy, you do see the rejection. All of that makes sense. We do see that CAD still has some strength in it, because why do we get a brand new 4 hour candle that's pulling down for a sale? Why is my stochastic starting to get that lean in it, right? So obviously there is still some strength in it. Can it pull down? Absolutely, it still can, which is why this triggered over here. All right, which is why my Euro CAD triggered for a sale. Would I pay attention to my cycle level? Absolutely. But in the big picture, what you're seeing is an opportunity. Now, is it going to go straight up? No. It's going to go, pull back, go up, pull back, go up, pull back, go up, pull back, right? That's what it does. So that's what you have in your hands. Questions, comments, testimonies. Questions, comments, testimonies. You see, we get through one good trade when we take our time. One. So it's kind of like a catch-20. It's like a double-edged sword, a catch-22, right? Because you guys want me to slow down, to walk you through and analyze, right? That's what you want. And then some of you guys want more than one trade. So it's double. It's like, but the beauty behind it is what we're teaching you is to be master traders. So because we're teaching you to be those master traders, because you are those master traders, right? Because that's who you are, then you can take what we've gone through and apply it to whatever you want. So GBP AUD, I know I had seen a trigger somewhere. Was it here at the Harmonic Scanner? I saw something, but I know it was a sale. Here it is right here, trigger for a sale an hour ago, right on 15 minutes. Now, what you're asking me is, can you take a trade? So if you're, anytime we're taking a trade, right? Anytime, so you got to look more than, okay, this moving sideways. Why is this moving sideways? That's why I said I need more information. Anytime you're doing something outside of this, that blue line cross over the red and the downward, right? We triggered for a sale. Yeah, we did. But I want you to look at this, okay? Let's look at this. That's why I said we need to look at it. So yes, my 4 hour is in the sale and it's starting to flatline, okay? When I get to my hour has been in a nice sale and it pulled a correction and it's still kind of strong right there, okay? When I get here, we're still approaching. So on everything, we're approaching that oversold. So this one, based on your skill set level, is what I would tell you if you'd be able to really kind of take a look at it. And I say that because it's at the end of a trade. Now, can it break through and come through here, right? You look at what happened, all this rejection that's taking place right there. Absolutely it can, right? Absolutely it can pull through here a little bit. But as I'm looking at the big grand scheme of things and the big picture of the market, you know, we were in that sale, it pulled back up some. You see what we were moving up, it broke past this one. I'm kind of looking right here and I'm looking at this major rejection area, right? That's what I'm looking at. Then let me put my psych level on here, right? 85, I want 85. Make this blue. We're sitting on the psych level. So do you not see all this consolidation right here? So we're sitting on the psych level. This is why this consolidated so hard before it broke up to the top side. This is going to get us some rejection, right? We're going to get some rejection in here. We're not, you know, and then that's why my stochastic is starting to go sideways. That is why, you know, we're getting some rejection as far as right up in there. Look at how this is starting to pause. So anytime you start taking continuation trades, you really got to have a little understanding of the big picture of the market and what the big picture of the market is saying, because we're tapping into, we're rejecting off of a cycle level right now. Did it touch it? No, but it's close enough. And that's because one of the things we know that happen at psych levels is we have spreads. So technically we're in the zone of that psych level, right? We're in the zone of that psych level. Spreads. It's all right there. Look at how it's rejecting and look at that. Well, it might touch it, it might not. We're pushing it oversold. So I wouldn't even touch it right now. This is one I'm not bothering with. I'm waiting because it's a high probability that's gonna pull back up. We're too oversold. Let's see. Put some pivots on here and show you. Let's confirm it, right? Ta-da. So from a pivot perspective, right? Pivots. The pivot is your center point of the market, right? Based on what's transpired. So my pivots are my center point of the market. You see that right there? Now I come down here to my S1 and R1. Higher time frames, we typically fluctuate between S1 and R1. So let's box it out, right? That S1 and R1 is support and resistance. My hour and 4 hour, they typically hang around that hour in that R1 and S1. Anything over that is overbought, oversold. So doesn't it make sense that I'm pretty much about oversold down here because I'm already at the S1? I'm at the S1. I'm on the S1. And doesn't it make sense that I'm oversold now? That I'm in that zone? And then a great alignment would be, before I flip it down, a great alignment would be is if it stays between that R3 and that S3 on my lower time frames, okay? The R3 and the S3 on my lower time frames. When I drop down, right? When I drop down, look at where we are. So my R2, my R3, and my S3 is down here. So where we are is between that S1 and that S2 right here. So you guys see that the market is definitely kind of balanced out. It's not mixed. It's not sending us mixed signals. It's not. So waiting this one out, and that'll really kind of give you a really good trade. But you gotta wait. It's not a trade now. we're not trading outside of that zone. It's not a trade now. I'm talking about, so what do you think it will happen? Like this triggered for a sale, and now look, it triggered again for a sale. It just triggered again for a sale in the 5 minute. It just triggered again. GBP is got to be weak right now, and it just triggered again for a sale. So it's a valid trigger. Let's drop down, right? Yep. Not what I'm trying to do. No ma'am, no ma'am, no ma'am. All right. It is best to wait. So look at my master traders. Boy, I love it. So as you're looking at this, and you can see what it's always called in a correction. Just because we get a trigger don't mean this is why we tell you guys it's not a signal. So you look at what's happening right here, right? You see how it triggered for a sale on my 5 minute. It's always called in a correction. Let's check my 30. I check my 30 that you understand why it's a valid trigger. You're gonna get some triggers because you probably get more triggers as it's tap dancing around here because it's rejected. And this is where these triggers come from, these little zones like this. That's where those triggers come from. That makes sense? Questions, comments, testimonies. And look, we're starting to get some momentum, right? We're starting to get some, let's see our liquidity go up in the market. Look, see, you see how the market's starting to move? Remember we was like real low a minute ago? Average 98, we was like low. And now look, it's back up to 125. And you see, we starting to get triggers pop in. We starting to get all of that. Things are starting to flow into the market, right? So it's the liquidity push is coming. All right. Questions, comments, testimonies, guys. Any. All right. Well, you guys know what time it is. It is Wednesday there. Now, our call schedule, for those of you all that are new, because I know we had some 111s. And for those of you all who need a reminder, right? Can I please repeat the pivot zones for high and low time frames? Yeah, give me 1 second. So my call times is for my for Monday through Thursday at 5 a.m. and 9 a.m. Eastern Standard Time, Tuesday and Thursdays at 9 p.m., right? Also Tuesdays, we have a 5 p.m. broadcast. And the Tuesday and Thursday nights at 9 p.m. Eastern is always followed by a talk with the finance doctor. Now, let me be clear. We are moving into a holiday schedule, meaning that we don't force the market. We don't move the market, right? We can't do that. So understanding that is where we are, understanding that is what we do. See, this approaching that cycle level. Understanding that that's what we do and that's what we are. We have made some adjustments. There is no 9 a.m. call, all right? But we do have calls still. So no 9 a.m. call does not mean no calls, right? No 9 a.m., does not mean no 9 a.m. call does not mean no calls. Be clear. So now, coming up to the 17th, which is next Friday. So technically the 16th, honestly, if you want to be technical about it, we're going to go on holiday break. The market slows down. You guys are going to go study. And obviously I know you'll still be cashing out because as you can see, the market gets its liquidity pushes and it gets its liquidity moves. So you're going to go study. Can I get a 555? Can you commit to going to study? Can you commit to going to study? 555. Can you commit to coming back stronger and harder? Can you commit to coming back ready for 6 figures in 6 months? Can you commit to getting into the lab? Can you make that commitment? There we go. I need you guys committed. Don't go on break and be on break. I need you guys to commit. It's time to take ownership. It's time for you all to take ownership. And for the question in the chat, the pivot ranges. So on my higher time frames, my higher time frames, if we stay within the R1 and the S1 typically, right? If we stay between the R1 and the S1, and on my lower time frames, it's the S3 to the R3. All right. It's the S3 to the R3. So definitely. All right, guys. So with that being said, I want you to kind of take a look and kind of watch these trades. I want you guys to prep yourself and get ready. I want you definitely to kind of walk in excellence, right? So I just want you guys to definitely understand that. And so with that being said, Miss Reed.
Yes, Miss Dyer, thank you so much for another wonderful prophet call. Let's pray. God, you're great and greatly to be praised. And we honor your presence in our midst this morning. We feel your presence because you promised to never leave us and never to forsake us. We're thankful, appreciative, and grateful for this, the greatest economic empowerment movement known to mankind. Yes, we're thankful, appreciative, and grateful for our dynamic dream team in the persons of Miss Dyer, Dr. Bythewood, and Mr. Rogers, and our second generation of educators, Ms. Anderson, Miss Brantley, Miss Perry, Mr. Sims, and Pastor Washington, and our radio host, Bishop Rolliston. Thank you, God, for the anointing upon each of our lives, the anointing that destroys yokes. And God, we thank you that prosperity, wealth, and abundance are loosed throughout our movement the world over. We decree and declare that we are turning this world upside right as you lead us to the next million households by March 28, 2022. God, we love you from the very depths of our heart. Thank you for your presence in our lives. In Jesus' name, we thank you. Amen. And thank God. And this officially ends our prophet call. We shall go our way today in abundance, and prosperity, and wealth. And we'll meet you tomorrow morning at 5 a.m.